Hey everyone, the growth in effectiveness in artificial intelligence is creating one of the most unprecedented investment opportunities in a long time. So I'm going to highlight 5 spectacular AI stocks you can buy today and hold for the long run. Let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
The first AI stock I'm going to highlight is Microsoft, which is trading at a forward price to earnings of just 30.5. I'm going to explain why I think it's a great value. Starting with the company's ability to grow revenue while expanding its operating profit margin. Microsoft over the last decade has grown its revenue from a little under $100 billion in 2015 all the way up to $236 billion in the most recent trailing 12-month period. Meanwhile, more importantly, it's been expanding its operating profit margin that entire time. It's now up to 44.7%, up from a little over 30% in 2015. Now, an operating profit margin of over 40% is a very strong operating profit margin. The best company in the world that I follow in terms of operating profit margin is at around 67%. So 44 is a really strong profit margin indeed. Looking forward, Microsoft is expected to grow earnings per share at 16.24% over the next 5 years. So not only has Microsoft done an excellent job in the previous decade, it's expected to continue to do well over the next 5 years. Of course, its investments in OpenAI and ChatGPT are going to help push this company forward for the next several years. The next company I'm going to recommend is NVIDIA. And can you even talk about AI stocks without mentioning NVIDIA? It's arguably the company that has benefited the most from the rising effectiveness of AI. Companies developing large language models are searching out NVIDIA's chip, and management has said that demand for its products are well in excess of its supply. So it's selling out well in excess. Now, NVIDIA's revenue has exploded up to 60.72 billion, 60.92 billion, I should say, up from less than 8 billion in 2015. That has also helped boost its operating profit margin from a little under 18% in 2016 all the way up to 54% operating profit margin in the most recent trailing 12-month period. Again, operating profit margin of over 50% is phenomenal. It's extremely strong, and NVIDIA is demonstrating that, as well as demonstrating phenomenal growth in revenue. And given the prospects for AI and NVIDIA's position, it's likely to benefit longer term. What's more, investors can buy NVIDIA stock today at a forward price to earnings of 28.8. According to this metric, I think NVIDIA stock is a bargain, especially if you consider that over the next 5 years, analysts expect NVIDIA to grow its earnings per share by over 37% in that time. Now, one rule of thumb that I look at as generally determining if a stock is cheap is looking at the price to earnings forward compared to the expected earnings per share growth rate. If the EPS growth rate is larger than the forward PE, then I think I'm getting a good bargain, unless I otherwise determine after digging deeper. And in NVIDIA's case, I'm getting a forward price to earnings of 28, while I'm getting an earnings per share for the next 5 years of over 37. For me, that's a bargain for an excellent company. The next company I'm going to highlight is Alphabet. The company generated $318 billion in revenue in the trailing 12-month period. That's up from less than $80 billion in 2015, and it generated an operating profit margin of 29%, given that it's increased from a little over 25%. Alphabet hasn't demonstrated as excellent a growth in operating profitability as the previous two companies, but an operating profit margin of near 30% is excellent in its own right. And to make matters even more attractive for Alphabet, its stock is trading at a roughly 50% cheaper valuation, or I should say roughly 33% cheaper valuation than the previous two stocks mentioned. You can get Alphabet stock at a forward price to earnings of 19.8, which is a good value, especially if you consider you're getting earnings per share expectations for the next 5 years of 19.7%. Again, a similar growth PE valuation compared to its forward EPS. And Alphabet, too, is on the cutting edge of AI technology, even though it's not done as well as OpenAI and ChatGPT in terms of its own large language model. Still doesn't need to be first place in that category to benefit from this trend. The next stock I'm going to highlight is the only one that's actually losing money on the bottom line, and that is UiPath. UiPath's revenue has increased nicely up to 1.3 billion, up from 600 million from 2021, and its operating profit margin is actually negative 12.59%. But UiPath has made excellent progress improving this from negative 56% all the way up to negative 12.6%. I don't mind investing in companies with negative operating profitability so long as they demonstrate progress towards profits, and that's what you're seeing with UiPath. As revenue has grown, so has its operating profit margin. Finally, UiPath is in an excellent part of the business cycle where it's combining the benefits of automation and artificial intelligence to help enterprises harmonize or make their operations more efficient. I think it's in an excellent position. And as we're going to see a little bit later, the analysts that follow UiPath stock agree as well. You can buy UiPath stock at a forward price to earnings of 28. And like I mentioned, the analysts on Wall Street that are following UiPath stock, they think it's going to grow its earnings per share by a whopping 46% over the next 5 years as they benefit from that combination of automation and artificial intelligence. I tend to agree with Wall Street analysts in being bullish on UiPath, even if maybe their earnings per share, I'm not as bullish. I think it's going to grow at less than 46%, but even if it grows at 35%, I feel like I would be getting a good deal with UiPath stock. And last but not least, Amazon, the e-commerce company, the bookseller turned everything store, right? Its revenue of 590 billion in the most recent trailing 12-month period is up almost 8x from 80 billion in 2015. That's incredible to think about, that Amazon has increased its revenue by over 500 billion in the last 10 years. Over 500 billion in growth from Amazon in the last 5 years. Truly impressive, and that's come with rising profit margins. That's what I like even more than just the revenue growth, is that it's coming with expanding profitability. Amazon's profit margin of 8.02% is up from a little over 1% in 2015. Amazon has nearly 8x'd its operating profit margin in the last decade, and management said there's more room to go as they find more ways to find efficiencies in the business. Investors can buy Amazon stock at a forward price to earnings of 32.87, which is a relatively great price considering that analysts on Wall Street expect Amazon to grow its earnings per share by 30% over the next 5 years. So there you have it, 5 spectacular AI stocks you can buy today and hold for the long run. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.